What up, everyone? Welcome back to Financial Education and Business. It looks like, it's a big day today for earnings. And so I just wanted to get on here and just kind of go over some of the companies that are that are reporting earnings after hour. We have some of the companies right here. As you can see, today's the 29th. After hour, we see companies like Starbucks, Meta, Google, all reporting. These are all some of the world's largest companies, and so let's see how they did. The 29th here, and then after hour, here they are. We just watched earnings about on Meta, which is pretty good, but then they got beat up. The stock market really took a big hit here, as you can see. As you can see, they're down 8% after hours, which is pretty bad. But overall, from earnings perspective, it was pretty good here. As you can see, they reported 8%. They reported 8%. They beat EPS by 8.86, expected 6.66, and then the actual report was 7.25 EPS. Revenue expectations was 41 billion. Actual reports were 51.24. They beat revenue expectations by 3.7%. But even though they beat, the overall sentiment was down. The stock market is down significantly after hours. So Meta stock dropped after 3 quarter. CapEx will be notably larger. So they're going to be spending a lot more money going into the next year. So that does scare a lot of investors. So that is one of the reasons why the market is kind of beating them up, because they've already spent a whole bunch of money, and in reality, investors don't really want to see Meta to continue to erode the free cash flow there. And then we had Google. Google's still yet to speak. Google's yet to speak. I think Google has come out with their number here. So Google is yet to provide their numbers. We see that their earnings were released, I believe, Q3 2025. So Google was expected to do a $94 billion revenue, but then they end up reporting $102 billion, and actually beat. For a large company like this to beat by 8% is pretty impressive. Still yet, they are continuing to grow their company, finding new customers, make revenue, and say no to the naysayers that thought Google was going to lose just due to the whole AI situation. Like, AI is going to totally change the company's future outlooks. So this is pretty good here. They beat revenue expectations by 8.8%. EPS, earnings per share, definitely beat expected. 2.27, ended up reporting 2.87. So a good beat there. 60-cent beat practically, and then that's about a 26.43 EPS beat. So Google, I think, I've made multiple videos on Google. I really think this company is the future of like how we do how we do our business in reality. Like, when it comes to quantum, they have a healthcare innovation. They have it. They have YouTube. YouTube is, in the near future is going to be the closest competitor to a company like Netflix, because Google is going to continue releasing videos. People are going to keep posting, so Google is not going to slow down at all on this growth. And so overall, due to what they reported, the market rewarded them. We are seeing that the market gave them a 2% day drawn during the day, and then 5% after hours close. As you can see, the market exploded, and it is still up there. From a news perspective, the most recent Alphabet Q3 earnings, revenue, EPS, top estimate. Google parent raises CapEx guidance on strong momentum. So practically, Google is going to continue investing money in AI development. That's the gist of it all. So let's go ahead and try to listen to what Google earnings look like here. Google earnings. I think they're going to be speaking soon. Um, I think Starbucks might be still speaking here. Nope. Mm, doo, doo, doo. Um, when is Google gonna start talking here? They're probably gonna start fairly soon, so we will be able to hear at 5:30. So we got some time from Google to start. Um, so let me see if I can pull up YouTube. And video Google earning call. That should be coming up fairly soon. It looks like it is all ads for now. Yeah, it's gonna be all ads until it looks like we're gonna be at 5:30. Mm-mm-mm.
Portfolios in today's market sitting dormant. Not because the market isn't moving, but because the investors.
Let's get to Mackenzie Sagalos for a look at some of the biggest questions that investors may have. Morning, Mac.
Hey, good morning, Carl. So Alphabet is navigating two very different AI realities. One that's accelerating its cloud business and another that's challenging the foundation of its search dominance. Now, analysts are bullish on cloud, with Google gaining momentum just as AWS loses some big deals to Alphabet. It's landed contracts worth tens of billions of dollars with Meta, OpenAI, and Anthropic. And now that Microsoft has lost the right of first refusal for OpenAI compute deals, the question is whether Google will be looking to beef up its current commitment with Sam Altman's startup. But not all of Google's AI momentum is upside. The company is still under pressure to protect its search business, which remains its revenue engine. Generative models are changing how people search, and while Google has rolled out AI overviews and redesigned the results page to meet that shift, there's still no clear path to monetization and no ads yet inside its consumer chatbot Gemini. Now, Truist expects global search and other revenue to slow slightly at 11% year over year, but says that Google still dominates the kind of queries that lead to purchases, and that's the ones that advertisers care most about, even as OpenAI and Perplexity gain traction. Now, Bank of America is looking for solid paid click growth and says that rising Gemini usage could help ease disruption risk. But the bigger question here, guys, is whether AI is ultimately strengthening Google's core business or starting to chip away at it.
Just coming across the wire, Sam, while you were mentioning how they closed today, EPS coming in for them at, let's see here, just came across as I'm scrolling, at 287, besting estimates for 226, so a beat there. As we're looking at their revenue for Google services, this one would be a key figure, $87.05 billion, also a beat there, $84.67 expected. Google search revenue, another key metric for them, $56.57 billion, also a beat here, 54.99 was the expectation there. Markets responding really favorably to this, up 3.5%. They're seeing their revenue beat, their EPS beat. They had double-digit growth across every major business category that they report in. This is exactly the kind of report that they were looking for. Their CapEx spend coming in at $23.95 billion, expectations for 22.38. Overall revenue for the entire quarter also a beat, $102.35 billion. Estimates calling for $99.85. I want to bring Kevin Green back into the conversation and also you, Sam, as we're taking a look at this, also getting some information about the cloud. This was a very important feature, that metric that a lot of the guests we were speaking to today said would matter. The cloud ending with $155 billion in backlog here. Just enormous numbers that they're putting up. Advertising revenue coming in at $74.18 billion, $65.85 last year. Also saying their Gemini app now has over 650 million monthly active users. So KG coming back in as we're looking at this report, now moving up 6% to the upside on these numbers. You know, clearly a very strong report. It's everything everybody who is a Google stan wanted. You know, what are some of your key takeaways as they're still coming across?
Yeah, I think the numbers overall obviously exceeded the street's expectations here. I think the market's still trying to digest a lot of the numbers because they actually did take a $3.5 billion hit that is showing up in expenses. So that's going to kind of dilute maybe some of these numbers and some of these metrics, especially when you're looking at operating margins. But overall, you are seeing that increase in CapEx spend, around a $6 billion increase from what they actually cited or estimated beforehand here. So that does give you kind of that fuel for the semiconductor plays, the utility plays out there to really still shine because the CapEx spend is not slowing down by any stretch of the imagination here. But once again, I think the market's really trying to digest this because there are a couple of outliers when you're looking at this report. But from the headline view, this actually looks like a decent read, at least for this quarter. Let's see how these stocks actually respond to these CapEx increases. I mean, at some point, there might be a concern that the free cash flow is going to be impacted pretty significantly. I'm not sure if we're there yet, but you are seeing a lot of gyration with a lot of these names after hours after they posted earnings results here.
Certainly. And Sam, I want to come to you. You know, I know you had a lot of conversations today about these earnings in particular and how important those CapEx numbers are in all of them in this AI race. Seeing their CapEx for the fiscal year up to $91 to $93 billion was supposed to be about $85 billion. In terms of those increases, is this what the people you were speaking to today were looking for? They want to see this increased CapEx spend.
It's exactly what they expected, I would say, Marley, because when I asked a lot of the analysts, you know, who was best positioned on the CapEx front, they very much seemingly said Google Alphabet is the best placed here, very much in a sweet spot, and wouldn't be surprised if they continue to throw big numbers out there as far as what they're spending.
Introducing Gemini Enterprise. Gemini Enterprise is an AI-powered conversational platform designed to bring the full power of Google AI to every employee for every workflow.
I mean, look at that, double-digit growth across most of its divisions. I mean, they've been saying how it's been a terrific quarter for them. So, you know, I don't think it's a huge surprise that we've seen this from Google Alphabet, but I think, you know, KG raises a really interesting point. At what stage are we going to get, you know, these questions from the market about, you know, how exactly are you monetizing from that? Now, I've also asked analysts about that. You know, if we don't hear with these companies matching what we're seeing as far as forecasts on CapEx, or as much as people are anticipating, do they have to then make up for it with explaining and giving evidence of actually how they're monetizing from it? And many people say that, you know, with the companies that we're looking at today, Google Alphabet being one of them, they are actually showing how they're monetizing from that. And, you know, they've also been striking deals as well. I mean, you've had the Anthropic to use TPUs from this company as well. I think also the big focus very much has been on that cloud, as well as you mentioned, and I suppose they've delivered on that front as well. So, yes, I think, you know, the search is expected to continue to grow as well, and that looked good. So I think all round it looked like a very strong report. But let's see, yes, as KG pointed out, and some of the analysts have been mentioning as well, at what point do we start to have these questions of show me proof of all this spend?
And, you know, I want to move over to Microsoft here, too. Some breaking news we haven't addressed yet in the show.
We got 2 minutes until earnings. Got 2 more minutes until Google starts yapping. And it's going to be interesting to see. They've already promised a couple things. They're going to be reporting CapEx. They've already reported really good earnings. So here we go. In about 1 more minute, we'll start listening to what Google has to say here. If I haven't showed you the numbers are looking pretty good for Google. So many distractions here. Jeez. The numbers are looking pretty good here for Google. Their earnings came out pretty decent. They were able to be top and bottom here. Revenue here at 8.8, and then EPS beat at 26.43. So let me go ahead and let's listen to Google's earnings. So they haven't started yet. As soon as they start, I will go ahead and start playing it. Let me turn my mic up. Let me turn down this music in the background. So news. So the main news here I was highlighting is that the CapEx guidance seems to be a lot higher compared to what they've had in the past. Okay. Alphabet reported financial quarters, Google Search, YouTube, Google Cloud, and advertising. So these are the information. They've started, so let's get into it.
And you will need to press star 1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Head of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's third quarter 2025 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Anat Ashkenazi. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thank you, Jim. Good afternoon, everyone, and thanks for joining us. This was a terrific quarter for Alphabet, driven by double-digit growth across every major part of our business. We are seeing AI now driving real business results across the company. We delivered our first ever $100 billion quarter. 5 years ago, our quarterly revenue was at $50 billion. Our revenue number has doubled since then, and we are firmly in the generative AI era. In parallel, we've built for the long term and diversified with successful businesses in cloud, YouTube, and subscriptions. Our momentum is strong, and we are shipping at speed. As just a few examples, our first-party models like Gemini now process 7 billion tokens per minute via direct API use by our customers. The Gemini app now has over 650 million monthly active users, and queries increased by 3x from Q2. Cloud had another great quarter of accelerating growth with AI revenue as a key driver. Cloud backlog grew 46% quarter over quarter to $155 billion. And we crossed 300 million paid subscriptions, led by growth in Google One and YouTube Premium. Today, I'll discuss progress in our full-stack approach to AI and then share highlights from Search, Cloud, YouTube, and Waymo. As a reminder, our full-stack approach spans AI infrastructure, world-class research, including models and tooling, and our products and platforms that bring AI to people everywhere. First up, AI infrastructure. Our extensive and reliable infrastructure, which powers all of Google's products, is the foundation of our stack and a key differentiator. We are scaling the most advanced chips in our data centers, including GPUs from our partner NVIDIA, as well as our own purpose-built TPUs. And we are the only company providing a wide range of both. As we announced yesterday at NVIDIA GTC, we are now shipping the new A4X Max instances powered by NVIDIA GB300 to our cloud customers. Our highly sought-after TPU portfolio is led by our 7th generation TPU Ironwood, which will be generally available soon. We are investing in TPU capacity to meet the tremendous demand we are seeing from customers and partners, and we are excited that Anthropic recently shared plans to access up to 1 million TPUs. Next, world-class AI research, including models and tooling. Our models are world-leading. Gemini 2.5 Pro, Veo, Genie 3, and our viral sensation Nano Banana are among the very best in class. Over 230 million videos have been generated with Veo 3. And more than 13 million developers have built with our generative models. We are looking forward to the release of Gemini 3 later this year. Our research leadership is advancing next frontier technologies. Last week, we announced that our Willow quantum chip achieved a major breakthrough, running an algorithm 13,000 times faster than one of the world's best supercomputers. And the result is verifiable, paving the way to future practical applications. Speaking of quantum, let me congratulate Michel Devray, our chief scientist for quantum hardware. He received a Nobel in physics for early research he did in the 1980s. 3 Nobels awarded to current Googlers in 2 years. Incredible. And third, our products and platforms. We are bringing AI to more people and developers than anyone else. In July, we announced that we processed 980 trillion monthly tokens across all our surfaces. We are now processing over 1.3 quadrillion monthly tokens, more than 20x growth in a year. Phenomenal. This quarter, we took big steps to reimagine Chrome as a browser powered by AI through deep integrations with Gemini and AI mode in search, with more agentic capabilities coming soon. In August, at Made by Google, we unveiled our Pixel 10 series of devices. They are the first with our most powerful chip designed to run on Gemini Tensor G5. They are our best-reviewed devices ever. And last week, we launched Android XR, our new operating system with Samsung's Galaxy XR device. It brings new ways to use headsets and glasses with Gemini at the core. Now turning to highlights from Search. AI is driving an expansionary moment for Search. As people learn what they can do with our new AI experiences, they're increasingly coming back to Search more. Search and its AI experiences are built to highlight the web, sending billions of clicks to sites every day. During the Q2 call, we shared that overall queries and commercial queries continue to grow year over year. This growth rate increased in Q3, largely driven by our AI investments in Search, most notably AI overviews and AI mode. let me dive into the momentum we are seeing. As we have shared before, AI overviews drive meaningful query growth. This effect was even stronger in Q3 as users continue to learn that Google can answer more of their questions. And it's particularly encouraging to see the effect was more pronounced with younger people. We're also seeing that AI mode is resonating well with users. In the US, we have seen strong and consistent week-over-week growth in usage since launch, and queries doubled over the quarter. Over the last quarter, we rolled out AI mode globally. It now has over 70 languages in record time. It now has over 75 million daily active users. And we shipped over 100 improvements to the product in Q3, an incredibly fast pace. Most importantly, AI mode is already driving incremental total query growth for search. Philip will talk more about monetization and share how AI is helping people connect with businesses and shop on search. Next, Google Cloud. Our complete enterprise AI product portfolio is accelerating growth in revenue, operating margins, and backlog. In Q3, customer demand strengthened in 3 ways. 1, we are signing new customers faster. The number of new GCP customers increased by nearly 34% year over year. 2, we are signing larger deals. We have signed more deals over $1 billion through Q3 this year than we did in the previous 2 years combined. Third, we are deepening our relationships. Over 70% of existing Google Cloud customers use our AI products, including Banco BV, Best Buy, and FairPrice Group. As we scale, we are diversifying revenue. Today, 13 product lines are each at an annual run rate over $1 billion. And we are improving operating margin with highly differentiated products built with our own technology. This deep product differentiation starts with our AI infrastructure. We have a decade of experience building AI accelerators and today offer the widest array of chips. This leadership is winning customers like HCA Healthcare, LG AI Research, and Macquarie Bank. And it's why 9 of the top 10 AI labs choose Google Cloud. We are also the only cloud provider offering our own leading generative AI models, including Gemini, Imagine, Veo, Chirp, and Lyria. Adoption is rapidly accelerating. In Q3, revenue from products built on our generative AI models grew more than 200% year over year. Over the past 12 months, nearly 150 Google Cloud customers each processed approximately 1 trillion tokens with our models for a wide range of applications. For example, WPP is creating campaigns with up to 70% efficiency gains. Swarovski has increased email open rates by 17% and accelerated campaign localization by 10 times. Earlier this month, we launched Gemini Enterprise, the new front door for AI in the workplace, and we are seeing strong adoption for agents built on this platform. Our packaged enterprise agents in Gemini Enterprise are optimized for a variety of domains, are highly differentiated, and offer significant out-of-box value to customers. We have already crossed 2 million subscribers across 700 companies. Next, YouTube. In the living room, YouTube has remained #1 in streaming watch time in the US for more than 2 years, according to Nielsen. Last month marked YouTube's first time as a live NFL broadcaster. This exclusive global broadcast, live from Brazil, drew more than 19 million fans and set a new record for most concurrent viewers of a live stream on YouTube. YouTube Shorts also continues to perform well. In the US, Shorts now earn more revenue per watch hour than traditional in-stream on YouTube. At our Made on YouTube event, we rolled out a number of AI-powered features that are helping creators supercharge creation and build their businesses. AI is now streamlining the entire content creation workflow, from generative video tools and more efficient editing to AI-powered insights that help creators optimize their channels. We are also using AI to expand monetization, automatically identifying products to make their videos more shoppable. Philip will discuss in more detail. And finally, Waymo. Next year, Waymo aims to open service in London, and they are working to bring service to Tokyo. They've also announced expansions to Dallas, Nashville, Denver, and Seattle, and secured permission to operate fully autonomously at San Jose and San Francisco airports. Autonomous testing continues to scale in New York City. The new Waymo for Business allows enterprises to offer Waymo as a work travel option. And we launched Waymo Teens accounts in Phoenix this summer. We are pleased to see usage steadily increase with positive feedback from teens and their parents alike. Waymo's growth and momentum are strong, and 2026 is shaping up to be an exciting year. Overall, a milestone quarter. The incredible work of our teams is driving momentum across the board, and our leadership in AI positions us so well for the opportunity ahead. I want to thank all of our partners and our employees for their hard work and an excellent Q3. With that, I'll turn it over to Philip.
Thanks, Sundar, and hello, everyone. I'll quickly cover performance for Google services for the quarter, then structure the rest of my remarks around the great progress we're delivering across search, ads, YouTube, and partnerships. Google services revenues were $87 billion for the quarter, up 14% year-on-year, driven by accelerated growth in search and YouTube, partially offset by year-on-year decline in network revenues. Adding some further color to our results. The 15% increase in search and other was led by growth across all major verticals, with the largest contributions from retail and financial services. YouTube saw similar performance across verticals. Its 15% growth in advertising revenues was driven by direct response, followed by brand. Starting with search and other revenues, which delivered over $56 billion in revenue for the quarter. As Sundar mentioned, AI is driving an expansionary moment and transforming how people use Google Search. Our investments in new AI experiences, such as AI overviews and AI mode, continue to drive growth in overall queries, including commercial queries, creating more opportunities for monetization. These AI experiences are enhancing how people connect with businesses and shop on search. We recently added shopping capabilities in AI mode, which now help people shop conversationally in search, and we expanded try-on capabilities to more clothing items, now available to anyone in the US. Lastly, we're making it easier for consumers to benefit from deals through new loyalty offerings like personalized annotations on organic results and ads. Looking at monetization, businesses can now tap into our most powerful AI search experiences. Using our most advanced AI models, we can understand and predict intent like never before, unlocking entirely new commercial pathways to provide valuable new consumer connections and helping us monetize even more efficiently. Rolled out globally in September, AI Max in search is already used by hundreds of thousands of advertisers, currently making it the fastest growing AI-powered search ads product. In Q3 alone, AI Max unlocked billions of net new queries. By delivering the most relevant ad across surfaces and matching advertisers against additional queries they weren't reaching before, AI Max helps advertisers discover new customers at the exact moment they need their product or service. Kayak, for example, looked to grow conversions while staying within their ROAS goals. After turning on AI Max in search, they grew the conversion value by 12% in early tests. We continue to infuse generative AI capabilities at every step of the marketing process. We rolled out Imagen 4 in Asset Studio and Product Studio, helping businesses produce more and better creatives. On the measurement front, we enriched the model supporting Meridian, our marketing mix model, with additional variables. And more granular reporting in PMax is making bidding more effective. Financial services company SoFi has been using PMax to meet its ambitious growth targets and help drive a 39% improvement in its conversion volume year over year. Moving to YouTube, where we saw accelerated revenue growth, our recommendation systems are driving robust watch time growth in our key monetization areas like Shorts and Living Room. As we leverage Gemini models, we're seeing further discovery improvement. On direct response, we're excited about the growth in revenue we're seeing, especially from small and medium advertisers adopting Demand Gen. We also improved performance on Demand Gen, with over 100 launches helping to increase conversion value by more than 40% for advertisers using target-based bidding on YouTube. The retail vertical continues to lead our growth on YouTube, with Demand Gen helping us further monetize shopping-related categories. Looking at the living room, our long-term bet more advertisers are adopting interactive direct response ads, leading to an annual revenue run rate exceeding $1 billion globally for this format. For our viewers, we continue to give fans greater access across sports while tapping into the best of YouTube's product innovation and creator-led content. Sundar mentioned that we expanded our NFL partnership with our first ever exclusive global broadcast of an NFL game. Brands loved the opportunity, and we sold all our ad inventory within a couple of weeks. Looking at creators, a significant force behind the thriving YouTube creator economy is the collaboration between creators and brands. Tools like direct linking to deals, websites, and shorts, and swappable brand segments in long form will soon help creators show how they deliver great value for brands. Thanks to a collaboration with Dude Perfect, Comcast Xfinity drove an 8% search lift, beating other Xfinity ads' recall lift on shorts by 34%. At the same time, it decreased the cost per lifted user by 50% when compared to the next most efficient ad. We continue to invest in AI-powered features that are helping creators supercharge creation and build their businesses. With VO3 integration and speech-to-song, creators go from idea to iteration quicker, and new channel insights help them better understand performance. Ending on YouTube with our subscriptions products, we're also seeing momentum with strong growth in offerings such as YouTube Music and Premium and YouTube TV. We're also applying Gemini internally to help us serve customers with increased speed, intelligence, and efficiency. Our sales teams use Gemini enriched with ads knowledge to streamline customer interactions. This increased productivity by over 10%, led to hundreds of millions in incremental revenue, and frees up sellers to engage with more customers at a deeper, more strategic level. In our customer support division, Gemini-powered solutions have managed over 40 million customer sessions so far this year and resolved hundreds of thousands of customer inquiries. And we're just getting started. As always, I'll wrap with the progress we're seeing across partnerships where our customers tap into the strength and breadth of Google's products to accelerate their transformation. Revolut, the global financial services company, leverages Google Cloud's Vertex AI platform and Gemini models to help power its advanced customer service chatbot, develop new hyper-personalized financial products, and offer predictive insights. Revolut is also increasing its presence on YouTube, adopting VO3 for personalized creatives, making Google a key ads partner for delivering growth and launching new markets. In closing, I'd like to thank Googlers everywhere for their contributions to our success, and as always, to our customers and partners for their continued trust. And, of course, a huge thanks to all of you as we celebrate 25 years of Google Ads. Anat, over to you.
Thank you, Philip. My comments will focus on year-over-year comparisons for the third quarter, unless I state otherwise. I will start with results at the Alphabet level and will then cover our segment results. I'll end with some commentary on our outlook for the fourth quarter of 2025. We had an outstanding quarter in Q3, continuing the strong momentum we've had throughout the year, delivering double-digit revenue growth across search and YouTube advertising, subscriptions, platforms and devices, and Google Cloud. Consolidated revenue reached $102.3 billion, a 16% year-over-year increase, or 15% in constant currency. Total cost of revenue was $41.4 billion, up 13%. Tech was $14.9 billion, up 8%. Other cost of revenues was $26.5 billion, up 16%, with the increase primarily driven by content acquisition cost, largely for YouTube, followed by depreciation and other technical infrastructure operations cost. Total operating expenses increased 28% to $29.7 billion. R&D expenses increased by 22%, driven by compensation and depreciation expenses related to our AI efforts. Sales and marketing expenses were flat, and G&A expenses increased meaningfully, primarily due to the $3.5 billion charge related to the European Commission fine mentioned in the earnings press release. Operating income increased 9% this quarter to $31.2 billion, and operating margin was 30.5%. Excluding the EC fine, operating income increased 22%, and operating margin was 33.9%. Operating margin benefited from strong revenue growth and continued efficiencies in our expense base, offset by the legal charge and a significant increase in depreciation expense. Other income and expenses was $12.8 billion, primarily due to unrealized gains in our non-marketable equity securities portfolio. Net income increased 33% to $35 billion, and earnings per share increased 35% to $2.87. We generate free cash flow of $24.5 billion in the third quarter and $73.6 billion for the trailing 12 months. Free cash flow in Q3 benefited from strong operating cash flow and recent tax changes regarding the timing of when research and development costs are expensed and assets are depreciated. This was partially offset by higher CapEx. We ended the quarter with $98.5 billion in cash and marketable securities. Turning to segment results, Google Services revenues increased 14% to $87.1 billion, reflecting strength in Google Search, YouTube advertising, and subscriptions. Google Search and other advertising revenues increased by 15% to $56.6 billion, representing another robust quarter with continued growth across all major verticals, with the largest contributions from retail and financial services. YouTube advertising revenues increased 15% to $10.3 billion, driven by direct response advertising, followed by brand. Network advertising revenues of $7.4 billion were down 3%. Subscriptions, platforms, and devices revenues increased 21% this quarter to $12.9 billion, driven by very strong growth in both YouTube and Google One subscriptions. Google Services operating income increased 9% to $33.5 billion. Operating margin declined year-over-year to 38.5%, as healthy revenue growth and continued efficiencies in our expense base were offset by the impact of the EC fine, which was fully reflected in the Google Services segment. Turning to the Google Cloud segment, which again delivered very strong results this quarter, as Cloud continued to benefit from our enterprise AI-optimized stack, including our own custom TPUs and our industry-leading AI models. Cloud revenue increased by 34% to $15.2 billion in the third quarter, driven by strong performance in GCP, which continued to grow at a rate that was much higher than Cloud's overall revenue growth rate. GCP's growth was driven by enterprise AI products, which are generating billions in quarterly revenue. We had strong growth in enterprise AI infrastructure and enterprise AI solutions, which benefited from demand for our industry-leading models, including Gemini 2.5. Core GCP was also a meaningful contributor to growth. And we had double-digit growth in Workspace, which was driven by an increase in average revenues per seat and the number of seats. Cloud operating income increased by 85% to $3.6 billion, and operating margin increased from 17.1% in the third quarter last year to 23.7% this quarter. The expansion in Cloud operating margin was driven by strong revenue performance and continued efficiencies in our expense base, partially offset by higher technical infrastructure usage cost, which includes depreciation expense and other operations costs such as energy. Google Cloud's backlog increased 46% sequentially and 82% year-over-year, reaching $155 billion at the end of the third quarter. The increase was driven primarily by strong demand for enterprise AI. As Sundar mentioned earlier, Cloud has signed more billion-dollar deals in the first 9 months of 2025 than in the past 2 years combined. In other bets, revenues were $344 million, and operating loss was $1.4 billion in the third quarter. Within other bets, we continue to allocate more resources to businesses like Waymo, where we see opportunities to create substantial value. With respect to CapEx, in the third quarter, our CapEx was $24 billion. The vast majority of our CapEx was invested in technical infrastructure, with approximately 60% of that investment in servers and 40% in data centers and networking equipment. In Q3, we returned capital to shareholders through repurchases of stock of $11.5 billion and dividend payments of $2.5 billion. Turning to our outlook, I would like to provide some commentary on factors that will impact our business performance in the fourth quarter of 2025, as well as an updated outlook for CapEx for the year. First, in terms of revenues, we're pleased with the overall momentum of our business. At the current spot rates, we could see an FX tailwind to our revenues in Q4. However, the volatility in exchange rates could affect the impact of FX on Q4 revenues. As for our segments, in Google Services, year-over-year comparisons in advertising will be negatively impacted by the strong spend on U.S. elections in the fourth quarter of 2024, particularly on YouTube. In cloud, demand for our products remains high, as evidenced by the accelerating revenue growth and the $49 billion sequential increase in cloud backlog in Q3. In GCP, we see strong demand for enterprise AI infrastructure, including TPUs and GPUs, enterprise AI solutions driven by demand for Gemini 2.5 and our other AI models, and core GCP infrastructure and other services, such as cybersecurity and data analytics. As I've mentioned on previous earnings calls, while we have been working hard to increase capacity and have improved the pace of server deployments and data center construction, we still expect to remain in a tight demand-supply environment in Q4 and 2026. Moving to investments, we're continuing to invest aggressively due to the demand we're experiencing from cloud customers, as well as the growth opportunities we see across the company. We now expect CapEx to be in the range of $91 billion to $93 billion in 2025, up from our previous estimate of $85 billion. Keeping in mind that the timing of cash payments can cause variability in the reported CapEx number. Looking out to 2026, we expect a significant increase in CapEx and will provide more detail on our fourth quarter earnings call. In terms of expenses, first, as I've mentioned on previous earnings calls, the significant increase in our investments in technical infrastructure will continue to put pressure on the P&L in the form of higher depreciation expenses and related data center operations costs, such as energy. In the third quarter, depreciation increased $1.6 billion year over year to $5.6 billion, reflecting a growth rate of 41%. Given the overall increase in CapEx investments, we expect the growth rate in depreciation to accelerate slightly in Q4. Second, we expect sales and marketing expenses to be more heavily weighted to the end of the year, in part to support product launches and the holiday season. Q3 was a strong quarter, and we're excited with the adoption of our AI products, helped by a rapid pace of innovation and great execution by our teams. This translated into strong momentum in search, YouTube ads, subscription platforms and devices, and cloud, resulting in our first $100 billion plus quarter. Now, Sundar, Philip, and I will now take your questions.
Thank you. As a reminder, to ask a question, you will need to press star one on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. Our first question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Great. Thanks for taking my questions, everyone. The first one, maybe for Philip or Sundar, it's on agentic e-commerce and agentic travel. There's a lot of external Wall Street discussion about agentic e-commerce potentially monetizing at a lower rate than search. So the question is, what factors are you most focused on to sort of ensure a smooth transition for your search business and for your advertisers as you move over to a more agentic world? And the second one, Sundar, is on Waymo. How far are we from an integration of Waymo into more of the core Gemini capabilities and the users in the platform? You're taking your user data of where I'm going, what hotel I'm staying at, what airport I'm staying at, and have me integrate that into Waymo. So you can actually have users use their profiles to pre-schedule Waymos. How far off is that? What do we have to do?
Look, Brian, great question. This is all early, but we see agentic experiences really as additive to the way people seek information. It helps us answer people's tough questions. It helps people get stuff done, and it helps businesses in the process. And we're working on multiple agentic experiences across key verticals such as travel, commerce, shopping, and so on. And we're paying a lot of attention to creating a seamless user experience, but also to the fact that we need to integrate different partner ecosystems in a way that it creates value for them. And by the way, we're also working closely with a lot of our partners on the other side through our cloud services to improve their own agentic experiences. And so maybe we go a little deeper on the shopping side, where we actually use AI already very actively to improve the shopping experience. As you know, we launched a more visual experience on AI Mode that gives people a much more intuitive conversational way to shop. You can simply describe what you're looking for now, like the way you would talk to a friend, and we'll show you the visual shopping results. And then we think about building an agentic shopping future, and it has to be one, again, that benefits both users and merchants here. And you know that at AIO, we also introduced new agentic checkout, which will let shoppers use like agentic AI to buy products from merchant sites and so on. We have a partnership with PayPal to help merchants build agentic commerce experiences. We have a new open protocols for agent-to-agent transactions, and so on and so on.
And Brian, on Waymo, great question. I was reflecting, I think, on the exact same topic. I'm scheduled to meet with the team to do a review on it in a few weeks out. Look, it is an exciting time. Waymo clearly, is scaling up, particularly in 2026. And I think the possibility, as you said, of Gemini, particularly with the multimodal experience, as well as services like YouTube, I think there's a real opportunity to make the in-car experience dramatically better. Definitely something we are excited about, and you'll see newer experiences in 2026 for sure.
Great. Thank you both.
Our next question comes from Doug Anmuth with J.P. Morgan. Your line is now open.
Thanks for taking the questions. Philip, maybe you can just talk more about some of the drivers of the core search strength. And I guess in particular, when you think about AI overviews and AI mode, we know that query growth is accelerating, but can you help us understand from there kind of what happens in terms of clicks per query and conversion rates and pricing in these AI-driven search formats? And then, Anat, can you talk about where you see opportunities in the core cost base as you look to make room to absorb the rapid growth in infrastructure and depreciation going forward? Thanks.
So let me give you a bit of vertical color first. In Q3, search and other revenues, again, delivered growth across all major vertical, as we said. It was from retail and financial services. Healthcare was also a contributor to the growth here. Our new AI experiences, you mentioned them, AI overviews, AI mode, continue to drive growth in overall queries, including commercial queries, really creating more opportunities for monetization. AI overviews are scaling up and are working for our entire user base. We're now scaled to over 2 billion users here, and we're continuing to expand ads in AI overviews in English to more countries across desktop, mobile, and so on. And as I've shared before, for AI overviews, even at our current baseline of ads, below and within the AI's response, overall, we see the monetization at approximately the same rate. So over time, we're excited about the opportunity of richer experiences in AI mode and AI overviews to basically open up then the opportunity for also much richer placements. I think, as I've said on a prior call, we managed a business to drive great outcomes for our users and an attractive ROI for our advertisers. We don't really manage to paid clicks and CPC targets. But as you will see in the 10Q, paid clicks were up 7% year on year, and CPCs were up 7% year on year.
Doug, and to your question around where else can we see more opportunity for efficiency and productivity, and I think you heard me say before, this is not a one-time type of effort, but rather an ongoing way in which we manage the business. And the key here is that the more we drive productivity across our business, the more we can invest in the business for growth and obviously continue to drive improvement in the P&L. Some of the areas are things that you've heard us talk about in the past, such as moderating the pace of headcount growth, optimizing our real estate footprint, but also as we invest more and more in our technical infrastructure, ensuring that we are optimizing that build out and the overall technical infrastructure we have. You know that a lot of the data centers, for example, that we build ourselves, so they're optimized and we make sure we do them in the most efficient way. Sundar mentioned on one of the previous calls the productivity associated with leveraging AI for Google. So there's the example, the percent of code, now nearly half of all code generated by AI. That's a way for us to leverage AI to drive further productivity across the business. And obviously, we always look at making sure that when we provide services or products, that we get the right economics and the right value for what we provide. So one good example is Shorts, which has a lower revenue share than InStream. That it helps to improve some of our gross margins. So this is an effort we have ongoing. I've mentioned in the past that we have a headwind with depreciation, obviously increasing alongside our CapEx increase. So we have efforts across the organization to ensure we run the business in the most disciplined and productive way while continuing to invest for future growth.
Thank you both.
Our next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thank you so much for taking the questions. Maybe two, if I could. Sundar, when you think about your custom silicon efforts across the organization, can you reflect a little bit about the opportunity set you see with each passing generation of custom silicon, both in terms of driving operating efficiencies inside the organization and potentially increased monetization efforts around those outside of the organization? Second question would be for Philip. Obviously, we can see the YouTube advertising revenue number in the reported results. Can you reflect a little bit about the scaling of the subscription side of YouTube offerings and how the two parts in together maybe represent an interesting framework in thinking about the monetization side of YouTube increasingly being a mix of both ads and subscription? Thank you.
Eric, overall, I would say we are seeing substantial demand for our AI infrastructure products, including TPU-based and GPU-based solutions. It is one of the key drivers of our growth over the past year, and I think on a going forward basis, I think we continue to see very strong demand, and we are investing to meet that. I do think a big part of what differentiates Google Cloud, effectively, we've taken a deep full stack approach to AI. So we are, and that really plays out, right? We are the only hyperscaler who's really building offerings on our own models. And we are also highly differentiated on our own technology. So to your question, I think that does, give us the opportunity to continue driving growth in operating margins in cloud as we have done in the past. And also, I think from a revenue, sets the infrastructure portion of our business to be a growth driver looking ahead as well.
And to the second part of your question, look, just taking a quick step back, we often describe YouTube's business as a flywheel. Obviously, it first all starts with the creators, and we have significantly invested here to be the place that YouTube creators really call their home. That's a big piece of it, the number one piece. Viewers, of course, YouTube has billions of monthly logged-in users, and every day people watch billions of hours of video. And we talked about how our recommendation systems are driving robust watch time growth, and so on and so on. So on the monetization side, YouTube's business is really powered, I would say, let's call it a twin engine monetization strategy, combining its advertising business and its growing subscription services. Both YouTube ads and subscriptions saw strong growth this quarter. And so looking at YouTube Music and Premium, users are on average delivering more value to creators, to music media partners, and YouTube itself than even ad-supported users do. So in other words, on average, a YouTube Music and Premium subscriber generates a meaningful higher gross profit than they were simply an ad-supported users. And fans come from all over the world, this, and this engagement through ads and subscription generates YouTube's revenues and funds what I started with, these creators here. And this then drives more viewership and engagement and so on. And that's the flywheel. And so our priority continues like this growth cycle. We're happy with this twin engine monetization strategy.
Our next question comes from Mark Shmulik with Bernstein. Your line is now open.
Yes, thanks for taking the questions. Sundar, with the strong adoption of Gemini, AI mode, and overviews across the user base, are there any meaningful differences to call out kind of around the behavior and depth of engagement for those users across the entire Google ecosystem? And then, Philip, I know we kind of asked this, most quarters, but I'm curious kind of with some of the adoption you've seen around AI overviews and mode, how you see the economics of search evolving with the higher commercial and total query volume and how it kind of compares against the incremental cost to deliver these results. Thank you.
Mark, look, I think obviously AI overviews are a natural part of the Google experience, and so engagement is very, very high. I would say AI mode, you have a varied cohorts. There are people who are casual users who are checking it out, but there's a core group which really likes AI mode and is passionate about it, and so you see the early adopters. The product is resonating very strongly, and they're seeking it out. So I think that's how I would highlight the difference. With Gemini, again, set of engaged user base who are seeking out the are definitely seeing in each of those use cases a set of early adopters and then more people coming in, and the people who are using it continue to use it more over time and report high user satisfaction. So I would say the underlying product metrics are pretty encouraging to see as well.
Look into the second part of your question. I think we covered before, Sundar covered the query development. And as I've just said before, for the AI overviews, even at our current baseline of ads, right, whether above, below, and within the AI response, overall, we see the monetization at approximately the same rate. And this is a great baseline for further innovation. We talked about this. We're excited about where this can go. And on the AI mode side, we're testing ads in AI mode, and we'll continue to test and learn before we expand this any further. So this in combination with what we mentioned about the commercial query overall development, I think we're in a good place here. You could also argue that on queries that historically have not been well monetized, we think there's a potential opportunity here where you can obviously imagine that we can build this out with smart AI integration.
Our next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thanks. I have two, one for Philip, one for Anat. Philip, it's clear that when people use AI mode, the query length is much longer. Could you talk about how that longer length may be impacting your ability to drive ROAS and what you're seeing in terms of some of the benefits of maybe longer query length? And then, Anat, you came to Alphabet from a pharmaceutical company. You've been there more than a year. Can you talk a bit about how you're working to look at ROIC internally, and what early signs are you seeing that gives you confidence that this spending is really driving better returns longer term? Thanks.
Look, as Sundar shared, AI mode now has over 75 million daily active users in the US, and we see strong and consistent week-over-week growth in usage since launch, and the queries doubled over the quarter. And as I also mentioned, we're testing ads in AI mode. We'll continue to test before we expand any further. It's really too early to tell and go into any of the details of that testing.
Okay.
Yes, and the question related to ROIC and how we look at just overall our business and where do we see early signs that are encouraging. So first, I would say it's not just early signs because we're seeing returns, obviously, in the cloud business. You've heard us talk about the fact that we already are generating billions of dollars from AI in the quarter. But then across the board, we have a rigorous framework and approach by which we evaluate these long-term investments that are meant to do two things. One is to ensure we build a resilient growth profile for the company, but also that we meet the demand of the customers that we have here in the more near and midterm. So we look at it across the business. We evaluate the potential return for each one of them, whether it's in cloud, and I think that's more visible, obviously, externally, given that you see the revenue generated and the fact that we're unable to meet a point customer demand. We have more demand than we have supplied. In our ads business, you see the fact that we're investing to transform search, as you heard from Philip and Sundar with AIO and AI mode. So we're excited to see what our advertisers as well. YouTube, where it's helping power recommendations. So when we make a decision on investment in the long term, we go through a very rigorous process of assessing what the return could be and over what time frame we will see that return to give us the high level of confidence to then invest and make those investments for the long term. So it's a very rigorous approach.
Thanks.
Our next question comes from Ross Sandler with Barclays. Your line is now open.
Great. About 20% of Google's search queries are commercial historically, and you've talked a bunch on this call about how AI overviews are kind of expanding the breadth of queries. Could you talk about how new products on the monetization side, like AI Max, are potentially increasing the percent of commercial queries?
So, look, AI Max, and I mentioned this in my call before, improves the ability for advertisers to target a wider range of queries. Separately, there is the question of whether queries actually increase with AI mode, and Sundar actually talked about it and mentioned the opportunity that he sees here. So I think it's important to separate those two things. And I personally also see, this is what I just said in my last remark, that I think over time there's an opportunity to actually take, let's say, queries that are not fully commercial but could have an adjacent commercial relationship to basically expand this into more attractive ads offerings without, while really creating a really interesting user experience at the same time.
Yeah, and the only thing I would add is just stepping back broadly, I think AI overviews and AI mode are, dramatically improving search. We can see it in user satisfaction, user quality, all our metrics. And they're universal in the nature. They apply across the universality of human needs. So I think we are seeing it in breadth. And so, naturally over time, that'll apply to commercial categories as well.
Our next question comes from Ken Gawrelski with Wells Fargo. Your line is now open.
Thank you very much. Two questions, please. First, it appears more and more clear that all the new modes at Google with Gemini overview, AI overviews, AI mode, even ChatGPT is growing the addressable market for engagement in search-like behavior. Could you talk about what gives you confidence that it will also grow the addressable market for marketing activity and overall revenue associated with that behavior? That's question one. And question two is just more about, as you think about AI mode, AI overviews, and traditional Google search, how do you think, do you see a world in 12 to 24 months, those all will exist? And does the user eventually pick what mode they want? Does the algorithm pick the mode? Can you talk a little bit about how you think that will progress over the next 12 to 24 months? Thank you very much.
Ken, thanks. Look, I think, it's a dynamic moment, and, I think we are meeting people in the moment with what they're trying to do. Obviously, search is evolving, and, between AI overviews and AI mode, I think we are able to kind of give that range of experience for people in this moment. Over time, you can expect us to make the experiences simpler in a way that, just like we did universal search many, many years ago, we may have done text search, image search, video search, etc., and then we kind of brought it together as universal search. So you will see evolutions like that, but I think we want to be sensitive to making sure we are meeting the users, in terms of what they are looking for. I think Gemini allows us to build a more personal, proactive, powerful AI assistant for that moment, and I think having the two surfaces, Search and Gemini, allows us to really serve users across the breadth of their needs. But over time, we will, thoughtfully look for opportunities to make the experience better for users. And to the first part, I would broadly say, as I do think we've been consistently saying for a while now, this is an expansionary moment, and we are seeing people engage more. And I think when they do that, naturally a portion of that information for users, those journeys are commercial in nature. So I would expect that to play out over time as well.
Our last question comes from Justin Post with BAML. Your line is now open.
Great. Just a couple. Sundar, I think you mentioned Gemini 3 is coming. Maybe you comment on the pace of innovation in frontier models. Is there still just a tremendous amount of innovation, or is it slowing at all? And then you mentioned, a number of large deals signed in the last 9 months for cloud, which is great. Any changes in the economics of these deals as far as long-term profitability? Anything we should be aware of? Thank you.
Thanks, Justin. The first on the pace of frontier model research and development. Look, I think two things are both simultaneously true. I'm incredibly impressed by the pace at which the teams are executing and the pace at which we are improving these models. But it also is true at the same time that each of the prior model you're trying to get better over is now getting more and more capable. So I think both the pace is increasing, but sometimes we are taking the time to put out a notably improved model. So I think that may take slightly longer, but I do think the underlying pace is phenomenal to see, and I'm excited about our Gemini 3.0 release later this year. On cloud, I would point out as a sign of the momentum, I think the number of deals greater than $1 billion that we signed, in the first 3 quarters of this year are greater than the 2 years prior. So we are definitely seeing strong momentum, and we are executing at pace. And in terms of long-term economics, I would say that, again, us being a full stack AI player, and the fact that we are developing highly differentiated products on our own technology, I think will help us, drive a good trajectory here, as you have seen over the past few years.
Great, thank you.
Thank you, and that concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again on our fourth quarter.
Well, I look forward to hearing that call. All right, that is the sum of all the meetings. Looks like Google did have a great earning today. Their stock is also confirmed. The market is also confirming that what they reported was amazing. Just doing a quick review here from their earnings perspective. Google did beat at EPS and revenue. Revenue was beat by 8.8 and EPS by 26.43. This is not new for Google. Historically, they have always beat the earnings pretty well. So it's just good to see that they continue to do this. Q2, as you can see, Q3 they beat. They had a surprise. Q2 they had a surprise as well on EPS and earnings. Quarter growth here they didn't do as well, but overall Google is normally used to just beating, so they hit expectations and some when they they beat EPS by 26.43. Going on to just do a quick overview of how they reported their earnings, so we can get a better picture here. This is looking at Google's Q3 fiscal year 2025 income statement. So what they reported today are actually really good numbers. Their search advertisement. So everybody thought, okay, you know what? Google ads is not going to work. AI is going to replace it. People don't like the AI overview. People are going to like AI overview, and they're not going to want to click on these blue links that they're used to. And that's how Google used to make its money. But now that entire theory is broken, just because we are seeing the Google search advertising is up by 15% year over year. So last year, everybody was screaming these numbers are not going to hit, but here we go. We're into the new year, and they're growing by 15% year over year. Of the ad revenue, of the total ad revenue, they are seeing that on YouTube they're hitting 10.3. That's a 15% year growth, and then Google Ad Mode, AdSense, and Google Ad Manager went up by about 3%. So in total, their ad revenue was $74 billion, $74.2 billion, up 13% year over year. So as you can see, the company is Google continues to grow despite AI disruption that everybody was worried about. Like I always say, winners continue to win. Going on to the next phase here, Google Play. So that's the Fitbit, Google Nest, Pixel, YouTube Premium TV, Google Cloud. Google Cloud includes the Workspace, Enterprise, Android, Chrome OS, and other APIs. And then other bets that they have here, like Waymo and so on. That is bringing in total between the ad revenue and these other bets that they have, they're coming at $102.3 billion in revenue for this quarter. That's a 16% revenue growth, despite everybody yelling that AI is going to replace a lot of the way that Google makes majority of their money. So as you can see, $74.2 billion of their earnings, out of the total of $102 billion in total revenue, is coming from ad revenue. So people are thinking this is going to get beat, but that's not true. Let's move on. They got their expenses, so we're going to split it up here. Out of the $102.3 billion, 41.4 is going into cost of revenue, and then after those costs, we're hitting gross profit, 60% gross margin here, year over year, and that we're seeing 60% growth, which is $60 billion there. A portion cost of the main cost of revenue broken down: operating expense, 29.7, TAC totals at something cost, administration costs probably 14.9 billion, and then other costs like Waymo and so on, and whatever other costs they have, other bets. That's $26.5 billion in other costs. Moving on. They out of their gross profit, obviously they have other peripheral expenses outside of their operating expenses, administration, and so on. So here, out of the $61 billion gross profit, the company had to pay $29.7 billion in operating expense, and then their operating profit went up by 31%. So they continue to grow. They haven't even slowed down year over year. The company is showing that they know how to make money, retain their customers, and maybe even sell more to their customers, more products, more services, and so on. I think maybe I'll stop here and then say, like, I think with AI, the way it's going, Google's not going to there's going to be a lot of AI capabilities that Google is going to build, that companies and users and startups are going to want to connect as they make new businesses. They're going to want to use Google products. Google has a whole bunch of different data points that are useful for a lot of companies that are going to want to use their API services. As you can see here, when we're looking at their I don't see it here, but there you go. Their API services and cloud was up by 34% year over year. So this is growing significantly. So as you can see, out of everything else, the highest growth here is their cloud. As we go more digital, Google's business here is going to continue to grow in the world of AI. Let's go on and move on to and look at where is the company's money going. Their operating expense broken down is research and development, which is up 15% of revenue, which 15% of revenue, which is about $15.28 billion. And then they're a part of general administration, $7.4 billion, 7% of the total revenue, 3 basis points, 3 p year over year. I think that's 3 points year over year. And then they have their S&M. They have was $7.2 billion. That's about 7% of their revenue. And then obviously they have their operating profit. At their operating profit, they pay $9 billion in tax, and then the rest of it hits net profit at $35 billion. So net profit margin is 34%. So Google is not the type of company you want to fade at all. Like everybody's saying, their ad revenue is gonna die a year ago, and they proved everybody wrong. They've grown that at 15%. And then out of everything else that they're growing is this cloud service. As we're going into the world of AI, this business is going to grow a ton because their API capabilities, the type of data they have on customers and online search, you have it, YouTube data, they are going to be very, very important. So obviously this cloud service is, and there's as well as their TPUs, obviously their silicon chips that they have, and we're not counting their other bets like Waymo. Autonomous driving is definitely the future. So Google definitely has a lot of businesses out there they consider other bets that are always fueling or getting ready for what's actually going to happen. One business is their quantum. Google has quantum. People don't consider that, but they're probably right now, they have the money, the capital to pay the best researchers, technologists to be able to continue to develop the #1 quantum research group or even quantum computer. So just like the same thing for NVIDIA, they have the capital. We have all these quantum related companies trying to get into this business, but reality, it takes so much money to do this kind of business. If the government is going to invest, let's say, in any quantum company, probably they should invest in Google or they should invest in IBM, because those companies have actual money. But anyways, Google has these businesses they always consider other bets. At the end of the day, it's probably is a business that's going to fuel what's going to happen in the future. So it is always amazing how they have these small businesses that drive revenue growth, and at the end of the day becomes a big part of their business. So as they grow this cloud revenue, this search revenue is not going to slow down at all, and so we're going to see Google become even larger and larger and larger. They're not that big right now. I think they're about a $3 billion company. Almost a $3 trillion company. And so overall, they can definitely get there with some of the largest companies like NVIDIA. NVIDIA is a $5.48 billion, 5.5 trillion and $48 billion. That's such a crazy number to say, but $5 trillion and $48 billion market cap company. It's a large company. Google, I don't see why they cannot get to that point as well because of all the products that they have. Google shuts down. Imagine if you couldn't watch YouTube tomorrow, what would you do? Not just YouTube, but like be able to search something on Google. What would you do? They have made themselves one of the most important companies, because even when you say Google, everybody knows what you're talking about. Google search. Google just means internet. They became the same thing as when you say water, people know what the heck you're talking about. So they became the thing that people use. So they became part of our daily lives, and without it, I think people will go crazy. So Google is one of the most important companies. I can see it going to, who knows, but in the future, this company is a $5 trillion company. So those are some of one of the numbers I wanted to just show. There was other data that I thought was important to kind of look at. I wanted to highlight here. We got Google Cloud, so in billions in revenue, operating income. So this is Google Cloud's revenue business here. So as you can see, this used to be nothing back in Q1 of 2020. But over time, this company, this entire thing makes money but loses money. Investors will say, like, why are you guys doing this cloud product? You guys are just losing money. Like, you shouldn't. But overall, as time goes on, you see that this cloud product is becoming one of the most important businesses that Google has. Now, at this point, making $15.2 billion in revenue, and then actually making operating income of $3.6 billion. And so overall, I think Google is not a company that you want to just, you want to mess around with. They are pretty amazing. So that is my Google earnings. I hope you enjoyed that. I'm going to probably continue the live stream just a little longer, talk about a couple things. Overall, earnings were actually pretty good. So let's quickly look at how all the other companies did today that actually reported. So after hours, we actually had Microsoft, we had Google, and the 29th after hours. All right, so we had Google, Starbucks, Microsoft, Meta, Chipotle. So Microsoft did have pretty good earnings here. They ended up beating at the bottom and top line. Meta did the same thing. They beat top and bottom, but the market didn't like it because of their capex. Google, they beat top and bottom, but they've increased their capex. Meta did the same thing, but the market said, you guys need to relax. You need cash flow for the future. But Mark Zuckerberg doesn't really care, so he's gonna continue to invest that money. His thesis, Mark Zuckerberg's thesis, is that you invest now so you don't ever become the number two, because being the number two can cost you a ton of money at the end of the day. So he wants to be number one in this industry, so he is definitely increasing capex. Mercado Libre reported as well. Let me zoom out here. Boop. Mercado Libre, they reported, as you can see, their Q3 earnings, they beat both top and bottom, and then they beat top and bottom. Do we look at Microsoft? Yes, Microsoft did report as well. Let me see if I can bring that up. Earnings, Microsoft, they beat top and bottom. The market didn't like what they reported, so the stock price was down about 3% after market, mainly because they decided that Microsoft sees Q2 sales, because sales were sees. Let me just click on this. Microsoft sees Q2 sales being. Can't see the news. Sorry, just give me a second. Nope. Microsoft. So Microsoft sees Q2 sales 79.5 to 80.6 billion versus 79. Microsoft's then that was the call that happened. AI cloud power double beats strong start to the fiscal year, but the market was, I guess, expecting more, so the market decided to sell off their stock. Starbucks, I think they reported top and bottom earnings, so they did. Oh no, they actually did not beat EPS. They lost. They were below guidance, which was below expectations, 5.45 EPS, but they came below expectations here. As you can see, for the last couple of quarters, Starbucks has been not doing so well on their earnings. They've been not hitting their EPS numbers. From a revenue perspective, revenue estimates, they have been here. They've been able to hit revenue, obviously, and historically, they. Let me look at here. The annual growth. Historically, here, as you can see, the blue is actual numbers, and then the gray is the expectations. So they are at or below the expectations, so not so good overall for the company, and it's not out of the ordinary. I think they had great performance over in China, so good for them. Starbucks stock rises on a mixed Q4 earning. It's clear that our turnaround is taking a hold, so not really making a good turnaround there. Obviously, we know that Starbucks has major impacts. They're being impacted in a major way over in China. There's a lot of new competition, even in the United States. Mercado Libre Q3 earnings, 30% revenue growth for 27th straight quarters. The best is yet to come. So this company does not know how to slow down. Mercado Libre does. They missed. They EPS 82 missed 96 estimate. Sales 7.4 beat 7.2 estimates. But despite this miss, despite missing on EPS, as you can see, they missed last quarter and this quarter. The market gave them a 2.76% after market close. So the market did not like that miss. Who else reported here? We saw Google. Chipotle obviously got hit 15% on Chipotle here. Chipotle is just struggling to grow here. People are not spending money as much as they used to. They are starting to just continuously hike their prices, and new competition like Kava is coming along and taking some of that market. Kava is actually really good. I've had it before. And they've reported, as you can see, they beat on EPS by about 3.5, and then they did not beat on revenue. They ended up not beating by 0.61%. Historically, if we look, they normally beat on the EPS end, but then when it comes to the revenue, the company doesn't always come to expectations. And then from a news perspective, 12 consecutive discretionary stock moving in Wednesdays after Chipotle stock slides after they missed some estimates here. Hopefully I can read the news here on Chipotle. Chipotle mixed and obviously even when Chipotle gets hit, a company like Kava, they're probably going to get hit due to just the overall here. Kava did get hit at the day. Throughout the day, they were about 2.69% down, and then close of business, they were down an additional 3.46%. So obviously, Chipotle and Kava, similar industry, they're getting beat up a little bit there. So that is all I wanted to cover here, but Wall Street hasn't caught up yet. Kava, Chipotle trade like, yeah. Who else could we cover here? Coca-Cola, I'm sure they had decent earnings. Coca-Cola they have decided to change some of the products. I think in the United States they've decided to only have cane sugar in their products and stopped using the artificial sugar. And there's debate where these types of sugars can cause more cancers versus the artificial sugars that were in there. So, but overall, Coca-Cola probably beat top and bottom here. Let's go look. Earnings Q3, October 29. 4 o'clock. The numbers don't show up, but I believe Coca-Cola consolidated Q3 adjusted EPS 2.6, up from 1.81. So they beat sales 1.8 up. Yep. So they beat on sales and they beat on EPS. Google announced 2.6 EPS and 1.89 revenue. So good numbers. The stock did go up after hours due to those numbers. To be honest, those are the main companies I wanted to cover. eBay might be also good to see how shoppers and are seeing how things are going here. It looks like it looks like buying power, so they made pretty good revenue. This is Carvana, so they made good revenue here, but EPS, earnings per share, were not that good at all. They literally missed earnings per share by 21.97%, and then their as you can see, their it's rare that they continue to beat on EPS. Here you go. So they actually beat EPS, and they missed here. They've missed in the past, but they've done decently well. But this is one of the first miss. So maybe this is an indication, the company is not, who might be seeing a peak, or maybe there's a shift in demand. So investors are saying, I'm out. So they sold. Carvana sold off end of the day. Throughout the day, they lost 2.28%. At close of business, they lost an additional about 9%. All right, so that is everything I wanted to cover here. Mainly wanted to cover earnings report. I hope you enjoy this video. If you do enjoy it, make sure you leave a comment in there. Go ahead and subscribe. I'm gonna try to go live as much as I can at least. Tomorrow's earnings are going to be pretty good here. We got Eli Lilly Drug Company. We got MasterCard, Roblox. We also have S&P Global. S&P Global. This is actually something you can buy in the market, which is pretty cool. Very, very stable ETF. A very stable company here. It's not as volatile as anything else. So if you are looking to ride the market up while it goes up, but it's not going to move that much, then if it gets hit, it doesn't go down as much as other companies. This is a good one here. Altria, not bad. If you're, I would not buy them just because maybe a lot of the stuff they do doesn't align with me, so I wouldn't go there. Shell obviously is going to show, where are we in the oil and gas industry? Is there demand? No demand is going to be important as well. 9 other companies are going to be reporting here. Lockheed, L3 Harris, so defense contractors are going to be investing. SiriusX's, there's a lot of investors that love this company, but I do not. I don't invest in them at all. Looks like eBay might have started, so I may just let eBay's earnings play. But tomorrow, a market close is going to be important. Some of the coolest companies out there are going to be reporting. You have your Amazon, one of the largest companies, Apple, Coinbase, MSTR. To show how is MSTR doing. Obviously, we know that MSTR buys Bitcoin, holds it on the portfolio. Earnings are probably going to be pretty bad. They continue to miss earnings. So we're not really expecting anything special. But look at this. Once in a while, they beat earnings like crazy. This company, their operational expenses is nothing. All you need is 50 people. All they do is they buy Bitcoin, they raise money, and that's it. So overall, they're going to be reporting tomorrow. It's going to be interesting. Last quarter, look at this. Last quarter, they beat EPS by over 46,000%, almost 47,000%. So not really a real thing. Like you can't judge these companies based on that. You judge them by their NAV, total assets to the number of total assets that they hold, the number of crypto that they hold. Let's go on tomorrow. Reddit. Reddit, I think, is a great company. They're gonna be the call is gonna be at 5 o'clock. When it comes to AI, I think Reddit is gonna win, just because when you go read a Reddit news or Reddit chats, like the details that people go on, it is so extensive. It is so useful for AI to kind of make a decent conclusion and actually give informative information back to the user. So obviously, I think Reddit is going to continue to see partners in the AI industry. So Reddit, I'm excited for here. Cloudflare, cybersecurity. I think cybersecurity is important. Roku, I think, is going to be important to look at. We're seeing like the World Cup coming along, so that company is going to have to get advertisement and get partnerships. So that's going to be important to see. First Solar is kind of messed up right now. Obviously, as you know, President Trump kind of just removed a lot of the benefits the solar companies have, and we're going into oil and gas. He's saying, one of his main things that he says is drill, 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 baby, drill. So right now we're drilling for oil and drilling for other types of energy sectors, not really focused on solar. I've spoken to somebody that is in the energy sector, and they say that about 16% of the energy that comes off the sun is actually captured by the solar, turned into energy. So maybe solar is not the type of the product that we need here. Here, Twilio is going to be important. I may listen to this company here. Their earnings when they come out. Normally, as you can see, they beat. This is a company that keeps beating. Obviously, they didn't do as well last quarter, Q4 2024. But overall, they continue to beat Q3. Analyst expectations probably going to be they're going to beat again unless something significantly impacted what they do. Look at the EPS beat just last quarter. They beat EPS by almost 57%, and the revenue by 3%. So I think the analysts are probably just saying, you know what, we don't see a reason why they can't beat. Rocket Lab, this is going to be, right? Rocket Company. Yeah, Rocket Lab, Rocket Companies. They're going to be reporting tomorrow. And so, as you can see, the last couple of quarters, this company continues to beat, and they continue to actually perform on their promises. So this is, Rocket Mortgage. So this is the mortgage company. I thought it was Rocket Lab. They're not, Rocket Lab is not reporting tomorrow, are they? No, okay, this is, my bad, Rocket Company. So this is more of like real estate related company here. Goldman Sachs. So I have to look into them. I've heard the name before, but like not interested in them at all. Let's go on. Motorola, GoDaddy. I don't know about. I'm probably not gonna pay attention to them at all. But I think so. These ones, the ones I kind of highlighted, those earnings are going to be really important tomorrow. Your Coinbase, your Apple, your cybersecurity defense, your Reddit, MSTR. That may kind of reflect on how the crypto industry is going to look like, but MSTR is going to be an okay earnings to see. Apple, Roku, obviously Roku is important for the World Cup that's coming up. Twilio earnings, they've produced in the past has been amazing. Probably investors are expecting the same thing again moving forward. This is not Zscaler, Zillow. Yes, this will be an important earnings. Zillow last quarter, they beat EPS significantly, 42.86% on EPS, and revenue by 1.28. I think Zillow is going to most likely do well just because rates have been up, and over the course of time, the Fed has just been coming out and saying, hey, we're gonna go down on rates, and when rates go down, that's going to impact mortgage rates. So that means more buyers are going to be entering the markets, especially the first-time home buyers, because a lot of people that graduated in the last 5 years have not been able to buy a home at all, just because mortgage was at 7%, down payment was insane, and then on top of that, they couldn't get a job because of the whole COVID situation, and then work from home and all this, and companies are hiring talent out of just abroad, out of their own states. So I think now where things are settled a little bit more, I think there's opportunity where Zillow is going to be reporting pretty good numbers. I think sales are going to go up. The ads on Zillow are going to go up. So there's potential here. So Zillow is up, down today, got beat up about 6%. And then aftermarkets, it looks like it went up by about 0.5%. Well, 0.47% to be exact. But I think this company can do well. They definitely got beat, as you can see, during that whole COVID situation. Just revenue just hit the bottom, and they're still sitting here. Normally, this is a company that's making what, 2.4, is it 4.26 billion dollars? Now they're barely making anything. I mean, they're making about $480 million. So there is still room for this company to continue to get those revenues that they used to. So Zillow might not be a good play, especially when we're going into an economy where the federal government is, hey, we are going to reduce rates, but not only that, we're going to do quantitative easing. They're doing two-pronged approach, because FOMC was today. Jerome Powell came out and said, hey, we are gonna start lowering rates, and we're gonna start buying back the bonds that we've issued, practically meaning there's gonna be more money in the economy, which means whenever there's more money, there's gonna be more companies that are gonna, do financing, take mortgage or business loans, and so on and so forth. Especially in the world of AI, there's going to be a lot of startups that are going to need money to grow. So that means as we're getting into quantitative easing and out of quantitative tightening, I think all these AI companies that want to go public or that want to raise money, they're going to see this opportunity, and I think they're going to take it. And so this is, I think we're just seeing we're going to be seeing another level of explosion here in the U.S. I think from an economics perspective. So obviously, I'm no god. I don't know this stuff completely, but I think that's what's going to happen. I mean, when we saw quantitative easing, right? Think about quantitative easing during COVID. What happened? The government said, here, you have money. They pushed a whole bunch of money into the market, and they also told the banks, hey, you don't have to have as much reserve anymore. So banks were able to go to almost like 1% reserve and of assets. So there's a lot more money banks can lend out. So in the same situation, as we get into quantitative easing, I think it's going to create a lot of opportunities, and therefore the market is going to lift off. The market is going to do very well. So if anything, I mean, right now, you thought the market is just overpriced, and maybe you're a little scared, like, oh, something's gonna happen. If anything happens, it's gonna be out of the blue, unexpected. And so far from what we've seen, almost every single company that is important to the economy, that is reporting earnings, it's been really good numbers. Really good numbers. Companies are using AI for productivity, which creates more efficiency. But obviously, on the negative side, we're seeing unemployment numbers continuously going up. Not good, but when companies are creating more efficiency using AI, then maybe unemployment numbers might not matter. That might make other things really cheap, and those employees can find jobs in other sectors. Maybe, doing what they love, making a YouTube video, starting a business. So obviously, when you don't have a job, sometimes people go to the extremes to be able to find a way to make money. And that's starting a business, mowing the lawn, the physical stuff of the world. And this is my choice. I think I have a job, but I'm just saying, if that does happen, maybe one day this YouTube situation will be a thing. Who knows? But I love this. I would do this every single day if I could. So if you're here, make sure you subscribe. I'm going to always continue to post. I'm going to always be here. If you have a stock that you want me to talk about, definitely post it in the comment section. This has kind of always been my passion. So I will, when the earnings happen tomorrow after hours, I will try my best to cover some of my favorite companies like Amazon, Coinbase, Apple, Reddit. I don't care about this company. I care about here, Cloudflare. So I will be here. Thank you so much for joining me today. I will be back tomorrow doing another video. Have a great night. Make sure you subscribe to tune in. I'm going to be coming out with more videos on some of the best companies that you can start looking at if you're wanting to invest. Nothing that I say is financial advice. Obviously, I don't know, but I know a little enough of the market. I've been doing this stuff since I was 12, so I know some things. And so it's been a long time. So that is all. If you're still here, make sure to subscribe, and then I'll talk to you tomorrow. Have a great night. Peace.